This lecture is an introduction to the negative list. Negative list is basically a list of purchases, inward supplies, on which input tax credit cannot be claimed. So, in order to understand negative list, the first thing that we'll need to know what exactly is included in purchases. Under the Act, purchases are broadly categorized into three categories: inputs, capital goods, and input services. Capital goods is nothing but the goods, the value of which can be capitalized in the books of accounts, and that such goods are used in the course of furtherance of business. Again, the concept of value addition. It is used to improve business, directly contributing to output. Well, the definition of input under the law is very simple. All goods purchased which are not capital goods, but again, they should be used for the furtherance of business. Input services, as you can guess, are nothing but services purchased for use in business, for furtherance of business. So these are the three types of purchases: inputs, input services, and capital goods. And on all three purchases, generally, input tax credit is allowed. So this is an important point. Input tax credit is in general situations available on purchase of inputs, capital goods, and input services. So what are those rare occasions where input tax credit is not allowed on these purchases? Remember our discussion on dis-incentivizing overheads, where the government would want to incentivize value addition. It would try to balance its financial resources by disincentivizing overheads. How? By putting the purchases which fall into the category of overheads in something called as the negative list. Now, this is not really stated anywhere in the law. This is a concept that we've built up by studying the input tax credit provisions. This concept would make it very easy to understand the negative list, and it actually makes sense as well. And based on the concept of value addition and overheads, we have three types of purchases: the exempt purchases, ITC eligible purchases, and the negative list purchases on which ITC is not available. So in this section of the module, the first section, we've seen that the input tax credit is credit for input tax on supplies and reverse charge. So input tax and reverse charge can be claimed as credit to offset your output tax liability. That supplies include inputs, capital goods, and input services, and negative list is the list of supplies on which input tax credit is not available.